Welcome back to another Tech Talk from MarketEdge.com, your source for unbiased technical analysis. With me today is David Blake, CMT, here to discuss what happened in the market last week and what to look for as we head into this week. All right, David, how are you doing today?
I'm doing well, thanks.
Awesome. Let's jump right in.
All right. Well, last week we had a bit of bookend rallies. It left the major averages mixed, but it did see the Dow Jones cross over the 50,000 bar on Friday, which for the first time, it was a nice little rally in that thing. But anyway, we started out on Monday. Everybody came in after the long weekend and we jumped in. We had a big rally in the chips, especially the memory chip makers, which have been outperforming lately. And we had a big jump in Micron, Seagate, and especially SanDisk, which has just been on fire. It's going up 40, $50 a day. I just saw recently somebody put $1,000 price target on that. So I'm not sure what's going on with that. But then on the blue chip side, we had Caterpillar, which is the number one stock in the Dow over the last year or so, and Walmart, which is, I think it's the second best performer in the Dow over the last 6 months or something like that. And then you have Goldman Sachs too, but they led the blue chips higher. And we ended up with, I think, several hundred points higher. The Dow didn't make a new high, but we did get new highs in the NYSE and the Dow Jones Transportation Index. So then we come in on Tuesday, and all of a sudden we got some bad news with the software stocks. They're very concerned about this disruption in AI models to the software industry, which is easy to see if you've used any of the AI chat programs. I'm not sure how it's going to affect software stocks, but I think there'll be some that end up as winners and some will probably end up as losers and go out of business. But anyway, with the software dip and the semi dip, we had the NASDAQ down 336 points on Tuesday, 1.5%. The iShares software sector ETF, IGF, it tumbled 4.5%, and it went into a bear market. I think as of Friday or Thursday, it was down like 25% from its highs. Actually, if you look at stocks like Microsoft, it was $500 towards the end of last year, and now it's around 408. Salesforce, CRM stocks like that, you're seeing just take big dips. Adobe is another one that has had probably 20% or so clipped off of. So that's something to watch. And then we had a lot of selling into private equity firms. Now that you don't see the correlation there, because stocks like KKR and Blackstone, Apollo Management stuff, they've done a lot of heavy investing into software companies over the last decade. And of course, they make their biggest money when they try to bring those companies public. And at this stage, they own a lot of companies in the software business that they may not be able to bring public until they get all this straightened out. So we've seen a big sell-off in those stocks too. Actually, let me pull up something like APO here. Okay, it's been downgraded to a neutral. So you can see this big thing from 152 all the way down here and almost to 120 the other day. I would think that if you keep your eye on some of these APO, another one would be KKR. You might take a look when we upgrade them to a neutral or an early entry long, as they do still make a lot of money. And now today, actually having a little bit of a rally today because they're talking again more about using these firms for retirement plans and that kind of stuff to help them move the assets. So I would look at these stocks once they start to get upgraded by MarketEdge. Okay, so let's move on from there. Despite Tuesday and Wednesday, which we had another sell-off in the NASDAQ on Wednesday, it was down another 1.5%. The equal weight S&P 500, which the symbol is RSP, let's take a look at that real quick. And you can see this is long. It's had a real nice run over here. In fact, I think year to date, it's up 5%. So it's outperforming the regular S&P 500 as we see this rotation out of technology stocks, the big cap technology stocks, the software stocks, a lot of the Mag 7, but they're priced for perfection, and any little slip with Microsoft, the Azure cloud stuff was up 38%. And that wasn't enough for some of these investors. They wanted more than that. It's a great number, but the stock sold off after that, sold off pretty heavy, in fact. So some of these, you're seeing the RSP now outperform the regular S&P 500. In fact, down here, if you look at 50-day relative strength, it's outperforming the S&P 500 by about 5%. So that shows you that the rotation's going on. That's actually kind of a confirmation when we talk about money moving out of the tech sector and into more cyclical areas. That's going to benefit the RSP. Now, those 2 days when the NASDAQ was hit really hard, One of the things that I noticed, and most technicians would notice, is that underlying breadth on those 2 days. I think it was, yeah, on Tuesday and Wednesday, both was actually positive. Again, that means you had more stocks going up than down, but because of the overweighted Mag 7 and big cap tech stocks, you saw the NASDAQ going down 1.5%. And that's because of that. In fact, I think the RSP was equal weight was actually up either Tuesday or Wednesday, making another new high. There were only 7 Dow stocks on that Wednesday that were red. We also had Chevron, Johnson & Johnson, Coca-Cola, Walmart, Amgen, Merck, Caterpillar. They were all posting new highs. While if you're sitting all in the big cap tech stocks, you were down just in those 2 days about 3-4%. And you also fell below the 50-day and 100-day moving average. So that was something to watch. The equal weight S&P 500, like I said, made a new high that day on Wednesday. The NYSE made a new high. The Dow Jones Transportation Index made a new high. And again, that's just showing that the big money, the institutional investors, are lightening up on the tech trade. And we'll see where it goes. We've talked often about how expensive a lot of those stocks are. Let them come down and bottom out a little bit, and then we can see what happens with that. And all of a sudden, we go into Thursday, and pretty much across the board, we saw a lot of selling. I don't really know the reason why we had such a big drop. I know Alphabet's earnings came out that day, and we also had a crash in the cryptocurrencies. Bitcoin dipped below 63,000 that day. It also wiped out completely all the Trump bump that we had after Trump got elected. People thought he was going to be crypto friendly. And it's actually Bitcoin's was down about 50% from its October high. So it's a lot of problems with that. And they're still not sure whether we've seen a bottom in Bitcoin. I think that's something that if you are interested or a buyer of that, you just kind of got to wait and see what's going on with it. I don't own any Bitcoin, so I watch it. If it gets to a level where I see some support coming in, maybe I may nibble on some of the ETFs or something. I'm not sure. But anyway, so we come in Friday, and all of a sudden all the dip buyers come in, and we had a heck of a Friday in the market. Everything took off. I think we had one sector that was down. Again, I'd mentioned that the Dow crossed above 50,000. That was very impressive. The rest of the market was a little bit mixed for the week. Now, at the end of the week, if you notice, we talked about this rotation, another confirming factor is even though the sectors finished mixed, you had consumer staples, industrial materials, and energy all finished the week at new record highs. While on the flip side of that, you had communication services, Alphabet and Meta, then consumer discretionary and technology. These are the big growth sectors. They were all lower. And again, they were weighed down by weakness in the overweighted Mag 7 stocks. So that again shows you the split market that we're currently seeing. Now, as far as the technical condition goes, we did battle back from that brutal sell-off during the week. I mean, I thought for a little bit there, we maybe would have gotten a little worse off, but we did find some areas where the market was able to find support and then come back on Friday. So that was a positive. I actually thought I was going to go to a neutral market posture, but the strength in the Dow was just so strong that we left it bullish. Now, the Dow Jones had a bullish crossover in the MACD, which is a short-term trend gauge. Momentum was strong. It did break out to a new high. And then the NYSE AD line, advanced decline line, also made it to new highs. We consider that a leading indicator of market direction. So that looks to me like it's probably going to keep the value and cyclical trades moving a little bit higher. And another thing I look at is secondary indexes because we like to see them lead the market higher and lower. In this case, you had the Dow Jones Transports up 8.7%, which is a huge move in a week. Then you had the small cap Russell 2000 gain 2.2%, while the Philadelphia Semiconductor Index closed the period up a 0.5%. So they're outperforming the broader market, which is a plus going forward. You did have a little bit of a mix again in the NASDAQ, where you had more new lows than new highs during the week, and they actually expanded pretty significantly. But again, on the NYSE, you had more new highs than new lows. So it really is a split market. Like I said, NASDAQ's down 4 weeks in a row. So that's not a market that's, breaking out in the tech trade. So we'll kind of watch that as it goes forward. Investor sentiment, it's still very, very bullish. In fact, we did see a little bit of a pullback in retail. Retail had come back to 39.7, which is just a little bit above the historical average of 37.5. It had gotten up to 44.4, which was the most bullish the retail client had been since November of 24, something like that. Then you also had a little bit of a pullback in the hedge funds. They went from about 92.6% invested in equities back down to about 84.9. So they pull a little bit of money off the table also. That's just shows you that maybe they're thinking we're getting a little bit toppy in here. Now, this week coming up, be aware we have two kind of significant events coming out. On Wednesday, we get the delayed jobs data from the BLS. Right now, I think they're looking for 70,000 new payrolls. That'll be up from 50,000 in December. And they're looking for the unemployment rate to be unchanged, about 4.4%. And then on Friday, we get the January CPI, which is Consumer Price Index. Right now, the consensus is for 2.5% year over year. That's 0.2% less than it was in December. And the core CPI, they're looking for a rise of 2.5%. That's compared with 2.6% in December. So it just shows that inflation is a little bit sticky. If you would see a variation in some of those numbers, you might see the yields move higher. I know a lot of traders are looking at around 4.35 or 4.4 on the 10-year Treasury. That's probably going to put a little bit more downward pressure on equities. So watch how the bond market reacts to these numbers that come out more so than what the market is going to do. And whichever way, if yields move much higher from here, that's going to be heavy on equities. If they can start to come down again, then they'll probably see the NASDAQ join the Dow, moving a little bit higher. But with the CTI going to a -3 negative configuration on this coming Friday, depending on the momentum index and sentiment index, if they remain strong, we can have a negative CTI and still have at least a neutral market posture. We'll see how those other indexes react to what's going on this week to see whether or not our posture will change. But more than likely, I've been talking a little bit about how we're getting a little bit toppy and not everything's going up. With the cryptocurrencies going down here, the NASDAQ struggling a little bit, probably will be going to a neutral on the market and just let things play out for a little bit before the CTI moves again to a positive configuration. Keep your eye on the earnings. You'll see some intraday big swings like we had last week. I think if Bitcoin continues to drop much more, that may cause a little bit of shakeup in the market also. It got down, like I said, to something like 63,000 last week. And I don't think you want to see it go much below that before it'll rattle some investors. So other than that, have a good week and we'll be back here next Monday.
Thank you so much, David. If you have questions for David or anyone on the MarketEdge team regarding technical stock analysis or your first 2 free weeks of MarketEdge.com, please feel free to reach out to support@MarketEdge.com or drop a comment if you're watching on YouTube. That's it for today, and we'll catch you next week. Thanks, David.
All right.